EM bonds are the best performing asset class in global fixed income this year, and EM local currency bonds have really stood out in particular. The asset class is up 11% year to date, which is 6% above global developed market sovereigns and 8% above the US broad market. This may come as a surprise to many investors given the news flow that we've seen that are really impacting fixed income markets. We see a worsening debt and deficit picture in the US, the initial shock and ongoing uncertainty of tariffs, domestic political dysfunction, geopolitical uncertainty, and the US's global standing increasingly being questioned by global investors. It's hard to separate the noise from what's actually going to play out, but we do believe that all of these factors do point to higher long-term rates, higher volatility, and higher for longer inflation. We also see these factors pointing to downward pressure on the dollar. As you would expect, many investors are increasingly looking to diversify their US-centric fixed income portfolios, and we think that EM local currency sovereign bonds are one of the best ways to do that right now. We see several reasons why the asset class can continue to outperform. Compared to developed markets, emerging markets have lower debt, lower deficits, higher yields, and independent central banks that have been successful in controlling inflation. Despite the performance we've seen this year, the higher yields and the increasingly compelling investment case for the asset class, we think many investors are under-allocated to emerging market local currency bonds. This may be due to a perceived riskiness of the asset class, but that is based on assumptions that we don't believe really reflect the current state of the world right now. In fact, EM local currency bonds have exhibited lower risk versus developed market bonds over the last 5 years. EMLC is the VanEck JP Morgan EM local currency bond ETF, which is the largest and most liquid US listed ETF that provides broad and diverse exposure to local currency EM sovereign bonds. Adding EM local currency bonds to a portfolio can provide a higher yield, allows you to diversify away from US rates and benefit from EMFX appreciation and the ongoing weakness in the dollar. It's an investment grade asset class, so you're not adding significant credit risk in order to achieve these benefits within your portfolio.